Assalamu alaikum. Welcome to the tutorial of National Income Accounting. And perhaps today we will not cover all of topics. We may only talk about GDP versus GNP and some of in topics about this. Okay, so what's GDP? GDP stands for Gross Domestic Product. That means it's produced in domestically and gross. Gross means before depreciation. We will talk about it. Okay, GDP is the market value of all final goods and service produced in a country in a given certain period of time. So, what's the key point of GDP is first market value. So, when you will talk about market value, obviously you have to concern also non-market value. So, what's market value versus or what's non-market value? We will talk later. Okay, this is second key point. What's final goods? So when you will talk about final goods, you have also intermediate goods, and it's a given period of time. Actually, time is vary country to country because in USA they calculate GDP after is 3 months, and in another country they usually calculate for within 1 year. Okay, and obviously there's a location, sovereign country. Okay, so what's market value? Market value is simply adding dollar by selling commodity or service. If you sell in some commodities, you will get an amount certain. This is market value. Suppose we have price of $1 a pen and we sell it 100 unit. So what's our revenue? Simply our revenue is $100. Okay. This is our market value. So what's our non-market value? When we will talk about non-market value, this is not usually we don't have the exact numerical amount. Okay, let's suppose in morning I have washed my clothes, washing cloth. Do you get, can you calculate total revenue in terms of total revenue? Answer is no, because I have washed my clothes. It's not the price times quantity. So there are lots of things like this is the non-market value. Okay, for example, if you teach in a free school teaching or any charity organization, or even if you work in an voluntary organization, this is actually this is the free. We can't measure the value. We don't have the market value. This is kind of what in some country like Bangladesh, the housewife usually don't get paid for their work. So this is non-market value. So market value versus non-market value. Okay, next, what's final goods? Final means we use for ultimate consumption. Okay, this is important, guys. Ultimate consumption. We use for ultimate consumption. So final goods are those goods and service that we use for our ultimate consumption. For example, Apple. All of you like Apple, right? So Apple, this is an final goods because we use ultimate consumption, and in Apple we don't use for further production usually. But if you make apple to or apple juice, this is another concept. But simply Apple, when we consume Apple, this is final goods. So this is the ultimate consumption, final goods. Okay, what's intermediate goods? Okay, suppose in our previous slide we have talked Apple is an final goods. Now we are making apple juice. We now don't want to consume apple, we want to apple juice. Okay, now suppose you want apple juice. So apple was our final, okay, final goods. Now we are turning apple to apple juice. So what will happen? Now apple is not final goods, final goods is juice. Okay, this is the bottle of juice like this. Okay, this bottle of apple is our final goods. So what's about apple? Suppose the apple price is, suppose, 30 cents. Okay, and the juice price is suppose 50 cents, and we know the price of apple is here point 30 cents. What about these? Okay, let me clear this because it's look like 50, this is 30 cents. Imagine we have apple, and now is still apple turned to apple juice. So if you look, that's our value 50 is not same as our previous apple. Okay, let me clear. See, okay, apple price is 30 cents, juice price is 50 cents. So if we add this 50 and 30 is 80 cents. Sorry, this is 80 cents. But what's our concern? So now juice is our final goods. If we subtract 50 to 30, we get 20. This is 20 cents we have add here. So this is 50, but this is not 80. So we can't again add 2. So this is double counting problem. Okay, our main task is what's intermediate goods. So intermediate goods are used for the further production. Okay, this is the further processing of production. So any good if we use for our further production is intermediate goods. So apple, if we eat directly, is final goods. Now we are not taking apple, we are consuming in term of juice. So juice is final goods, but in apple we use now for making juice. This is raw materials. Okay, this raw materials is now apple is now raw material. So when we will make any commodity and we consume it, this is our final goods. This is our final goods, but if we use apple for making juice, then apple is intermediate good. Okay, hope you have get enough idea about this. So we have talked about GDP, and now we'll talk about GNP. Okay, when we say GDP, GDP is the gross. This is the important because gross means before depreciation. Okay, what kind of debt is this? What's gross? Gross means before depreciation, because suppose I have a computer. This is the new I have purchased today. Its price is suppose $100. Okay, but after 1 year or after 2 years, is the laptop price is still $100? No. Today my laptop price is suppose $100. But what about next year? Obviously, suppose it's suppose $90. So this is $10 depreciation. This $10 is depreciation. This is the gross. So we can't calculate the old version or old product in our GDP. We will only calculate our GDP for this making today. Just not we will add the previous or old product. So this is the GDP or the final goods. So this is sum of gross, and domestic means we will produce in our domestic goods. So this is only a boundary, but when we will talk about GNP, this is not only domestic. We can produce in another country, one country. businessmen can produce in another country, because there's lots of increase and we'll talk about later. Okay, so we can produce it nationally, and we have to find who is the owner of this and what's nationality. We will say this is the national product. We will only produce in our own country, and we can produce is our country and as well as other country. So this is the two verses, and we will give an example here. Suppose Saudi Arab has set up an industry eggs plant in Dhaka, Bangladesh, and the labor of this industry is Bangladeshi. So this is the GDP for Bangladesh, because almost all people will working here they're Bangladeshi, and the maybe some high official people make work in from uh, Saudi Arabia. This no matter, but our almost people are from Bangladesh. So this is the GDP for Bangladesh. The labor are working in Bangladesh and the industry has set up in Bangladesh from Saudi Arabia. So this is the GDP for Bangladesh. So what's the benefit of Saudi Arabia? This is the GNP for Saudi Arabia, because the certain amount of profit will back return on Saudi Arabia from Dhaka, Bangladesh. So this is the GNP for the country. Or suppose USA has set up and plant in Japan. Now the laborer working, so the Japanese laborer working, so this is the GDP for Japan, but some certain, okay, let me draw an industry. Okay, suppose USA has set up the industry in Japan, so this is the GDP for Japan, but the amount of profit will come back in USA, so this is the GNP for US. Okay, so this is the question for you. What is double counting problem? We have already talked in our some previous slide. So think and let try to be find out your another real example. There's lots of millions or billions of example about your intermediate goals or the double counting problem. So if you enjoy and to by default to get our update, please subscribe our channel, YouTube channel Economics Hub, and thanks for your watching.